So I decided not to make a trade today because my key levels did not trigger during normal trading hours. These past two trading days on Tuesday and Wednesday have been phenomenal trading opportunities where we could have traded the best setups at the best prices. And I had addressed the strategies and addressed the trades that we've been taking in yesterday's video, along with the videos before that. So make sure you go watch that because it's really going to show you those were the best opportunities in terms of this entire week. In terms of today, I did decide to sit on the sidelines because the key level did not trigger. It did end up triggering in the pre-market as stated within the key levels. If the previous closing price of 383 goes green to red, spikes back up and reacts as a resistance, it's a quick scalp for puts for a drop back to support. So that did occur. We did go green to red and it did form a ceiling and it did spike back up, which was the opportunity to short, but it was during pre-market. Therefore, I decided to sit on sidelines. Sometimes I do decide to scalp and I do decide to trade at not the best prices. If I see a good setup and it's not at my key level, sometimes I will take that trade. I do not recommend anybody else to do that unless you're in a situation where you're already extremely profitable, you're successful, and you have a bigger bankroll and you want to experiment with other trading strategies that are not as good as the best setups at the best prices, and you want to kind of experiment on those. Obviously, in that situation, I would take a position size that is a lot less compared to my normal position size. But with that being said, we're going to start off with giving the analysis in terms of where we're at in the market right now. We're going to be going over the price action today, which is going to give you a better understanding on where we're headed for tomorrow. And we're also going to be going over the new key make it or break it levels. Keep in mind, if one of our key levels has not triggered in the previous trading plans, make sure your price alerts are still on there because they are still relevant as long as they have not triggered. Now let's get into the price action. So in terms of what ended up happening today, we went green to red. And like I said, if we go green to red and form a roof, so right here, this is when it went red, it spiked back up, it formed a roof, it formed the wicks, right? This is not support, this is a roof. The high of these candles are at the previous closing price. If it spikes back up, you play the puts. It would have worked out phenomenally, but unfortunately, it was during extended hours trading session in the pre-market. Therefore, I decided not to make a trade. Now, if you did decide to trade today, you are not trading the best setups at the best prices. So if that's what you're going to decide to do, like I said, you should only be doing that if you have a large account, you're already successful and consistent trading the best setups at the best prices. If you cannot be consistent and successful trading the best setups at the best prices, you stand no chance in any other realm of trading, right? You have to master that first. So with that being said, in terms of the trading opportunities that were there with basic price action analysis, nothing special, no key special strategy, this is what happened. SPY ended up going green to red, which is bearish. It opened up with a gap down. So we know the best price for puts is at 383.76, right? It did not go back to 383.76. Therefore, I decided to do nothing. Now, this is what the chart told us. The chart said yesterday's previous closing price, right, on Wednesday, was at $380.78. And this was strong support with big upside potential, right? So if it cracks and reacts as a resistance level, it's gonna get crushed, right? So when it cracks this support level, you don't try to predict support cracking. You just say, okay, support cracked, it had a nice drop. So this is what you can do. Now, this is not the best setup, but SPY had a gap down, it cracked key support, and it sold off towards a key support channel, then it started spiking, right? So it cracked that key support from yesterday, which is bearish, and it sold back off to the low end of this support level, right? Never try to predict a support level cracking. Never try to buy puts towards yesterday's low, towards the lows of these support channels. Like I said, a key resistance only, right? So in terms of what was the trade that was available if you were to just trade price action with not the best setups at the best prices, this was the opportunity. SPY had a massive sell-off and it turns the previous low in the previous closing price into resistance and it had a nice drop. So what do? You don't predict that support's going to crack. You wait for it to spike back up to the high. And as you could see, when it ended up spiking back up to the high, if it forms bearish confirmations, if it forms resistance, that's going to be a reasoning to scalp and try to buy put options. Not the best thing to be doing, but in terms of another strategy, this is actually called a gap fake out. When a stock gaps down, you take the high of day, and the high of day is right here at 381.70. If it reacts as a resistance level, forming bearish wicks, lower highs already crumbling and breaking down, then it's bearish and it's going to have a fake out. If it breaks out, pulls back, and reacts as a floor, reacts as a support level, then it's going to go bullish and start to fill the gap above. So it did have a gap fake out. As soon as it retested, it sold off and it formed lower highs, which is bearish. Therefore, it's going to try to retest and go back to the support level. But never buy puts at the support and never try to predict that a support level is cracking. If you were to buy puts today, the only place you should have been considering even buying a put today, right? It's not the best setup at the best prices, but the only place you should have even considered, if that's what you're going to do, is right here at the high where it faked out. And then it got crushed and got even new lows. So again, if it spikes right back up to that resistance and it forms these bearish candles, bearish candlesticks, you can play the puts again and then sell into the dips, sell into the dips. Now, these are other valid points. I started live streaming at 2 p.m. towards power hour, an hour before power hour, and this was the analysis that I ended up giving out. This is what I clearly said. I said, okay, this is the middle of the channel. The middle of the channel is at $378 to $380. The top of the channel is at $381.74. What you want to do is you want to focus on puts at the top of the channel if you're trying to trade the setups that aren't as great, right? So with that being said, when it hit this key level, I didn't say anything. I was not bullish or bearish. I didn't see strong confirmations here. When it started to pull back, I said, okay, this is the first time SPY hit the previous resistance level. This 380 was previous resistance, the top of the middle channel. This is the first time it tested the top of the middle of the channel. Therefore, what's going to happen is it's going to try to spike and it's going to try to bounce because previous resistance is going to try to react as support and they're going to try to run it up again to try to break out. Therefore, no reason for puts, right? So it spiked right back up and I almost pulled the trigger, man. I was hesitant because I like to focus on best setups at best prices, but sometimes I will trade key levels, right? But I almost pulled the trigger. Right around here, I almost pulled the trigger. I almost bought put options right here at the exact top. And the reason why was, first of all, it was faking out several times at the key resistance level. So it was already confirmed bearish. And the second reason was my squeeze indicator. When this goes teal blue, SPY starts to squeeze if it's at support. If this goes dark blue at a resistance level, like it was literally the high of day, and right here it triggered dark blue, it flips bearish and it starts to sell off. It's crazy on how well this indicator works. Take a look today. It triggered teal blue right here and it started to spike up. It tealed dark blue right around here and it started to get crushed back down, right? It consistently works. Even right here, it triggered teal blue. It started to spike. It triggered dark blue and it started to get crushed. So that's one of the things that I use to stack in my favor in terms of confirming if something's bearish or bullish, along with the gap trading strategies, the price action analysis, the support, the resistance. I always tell people, man, figure out what you can stack in your favor to confirm, the trade's going to work out and to confirm that you can even add in or scale to the trade. For me, those confirmations are mainly candlesticks, the gaps, the support, the resistance, and just understanding how price action works in general. It's mainly the price action as well. I really don't use indicators, but this is something that I've found to work. But with that being said, you can see as soon as it turned dark blue, the SPY started to sell off. And then you had this bearish wick right here. And then you had these lower highs. So those were reasons to start getting in on puts. The 381 puts were 40 cents out of the money. They were at 50 cents. They went up over $1.50. Absolutely insane. Now, in terms of confirmation to add to puts, if you got in on puts, right? Confirmation for the last add would be right here. This was your support. Your support was forming at this 381.20. If support cracks and reacts as a resistance level, see how it cracked and the top of this candle reacted as a resistance level. You add to 381 puts right before they go in the money. You have to be getting them when they're slightly out of the money so you can take advantage of that in the money print. And then as soon as it cracked the support where it bounced and had a little breakout here, it reacted bearish and it sold off very, very hard, very, very quickly. And this is another point that I made in the live trading session. I told people the SPY already initially bounced at previous resistance level. This is the first time where it bounced from selling off from the highs at the previous resistance. Therefore, it's going to try to spike because previous resistance is going to try to turn into support. The bulls are going to try to have their little micro win, right? The SPY faked out again. So then I told people it is very unlikely for the bulls to win this battle and for this to spike again at support because they failed the initial time. The initial reaction was a failure. They failed to break out. They had their little bounce at previous resistance, but it already bounced at previous resistance and it already spiked. They failed to break above the highs. Therefore, it should be bearish and it should crack support because they have failed to break out. That is the reason why. So do you see how that works? Do you see how that makes sense in terms of when support levels can crack? It's unlikely for it to crack support the first time because when it tests that previous resistance level, it's going to try to bounce. But if it has that double top, reacts bearish, fakes out, and then it goes back to the support level, it's going to be unlikely for the bulls to win because they already failed so many times. If it was truly bullish, what would have happened was previous resistance would have not only reacted as support the first time, but it would have started to break above the highs and form a floor, which is something they failed to do. It reacted as a resistance, it formed lower highs, it turned key support into resistance, and then it formed these bearish wicks in the dark blue squeeze indicator, and then it sold off very, very hard back to the support. So if you were to trade today, you wouldn't have been trading at the best substantive prices, but there is absolutely no reason on why anyone should have been red. There really isn't. It's simply trading a channel. Where's the top of the channel? The top of the channel is here. So you would be buying puts here with bearish confirmation at the top at resistance, and you're not trying to predict that support levels are going to crack. You're scaling out of the puts into the support levels, right? In terms of calls, I'm not too big on buying calls. In terms of my trading style, I believe in mastering one thing, and I like to narrow my one thing down into all realms, all small things in trading, right? So what's my one thing? My one thing is SPY. And then what do I add on top of that? Put options. I like to focus on puts. Okay, what's the strategy? Puts at resistance, at high key resistance that's confirmed. History tends to repeat itself. The gap strategies, the price action, the confirmations I use, right? I like to stack everything in my favor, but I like to narrow it down to one thing. And that one thing for me is the SPY, the put options, the resistance levels. I do not want to sit here and predict that it's going to break out and buy calls. I do not want to sit here and predict that it's going to break below support and then buy puts, right? What you can do is you can wait for SPY to break above resistance, and then it has a massive breakout, and then once it pulls back, you can try buying the first initial reaction of the retest. You could have done that right here. Another thing you could do is you could wait for support to crack, and then if it has a massive crash, wait for it to spike back up, short the first retest, only the initial time. That's another strategy. That's more advanced. I don't even like to focus on that in a sense, right? But that's what you could have done here. Previous support reacted as resistance, big sell-off, short the retest, right? Now, again, this is all basic. This is nothing special, but the reason why I'm saying there's no reason why anyone should have been red today is because you're supposed to be trading the top of the channels. You're supposed to be waiting for the big move to happen, miss out first initially, right? So wait for that support level to crack initially. This is support. Wait for it to crack initially. Then when it rips back up, you know the best level for puts would be the high of that day with very, very little risk. You're not risking above this. If you hold above this, your risk is going to be this gap that's waiting to fill above, right? So that's just basic trading channel. I don't hope for breakouts. I don't predict for breakouts. I don't hope for breakdowns. I don't predict breakouts. I miss the first move, and then I get in on the retest. That's the game, man. And you want to do this on wide channels. The wider the channel, the better. If SPY's at a massive channel where say it's at 390 and it goes to 380 and then it shoots right back up to 390, you better believe I'm buying puts in this bear market at 390 with confirmation, right? Wider the channels, the better. The quicker the overreaction, the better. That's what you want. You want quick overreactions, right? Miss out on the first move. That's the game, man. And there's ways to do this where you don't even miss out on the first move. That's what the gap strategies and everything else teaches. But this is just some basic price action analysis. Now, in terms of like where are we today in terms of the overall market in the trading plan? So in terms of the trading plan, this is the game. The game is 379.38. So 379.38, right? That's going to be the previous closing price. This is a make or break support level. We're going to call it like make or break support level. If this reacts as a resistance level, what's going to happen is, so if you see SPY go green to red, and then it pops back up, turns the previous closing price into resistance, what's going to happen is the bears are going to show up and they're going to try to bring this back down to 377.78. And then if it cracks 370.78, then they're going to try to fill the gap below at 376.66. So what would be the best level for call options heading into tomorrow? So if 379.38 reacts as a resistance level, the best price for call options would be towards this $376.66. Another amazing price, if it were to be an extremely volatile day and truly the best price, would be this gap that's waiting to fill below. There's a gap to fill below at 374.13. That's where we're looking for gap close reversals in terms of going long on this buy, would be towards 376.66 initial reaction for a quick move to the upside, and 374.13 would be the best level, right? That's if we flip bearish. So if you were bullish, I would wait for those lower levels. Now, if you were bearish, here's the problem with being bearish right now. The problem with being bearish right now is there's a gap to fill above at 383.76, and you're towards the lower end of this overall channel. This channel has been going on for about 11 days, right? So you're towards support, you're towards the lower end of the channel. That's the issue with being bearish right now. It's not ideal to be buying puts at these levels. I get it, at some point it can crack, but like I said, if it cracks, just let it crack. And then when it rips back up, you can try puts at that level towards that previous closing price. Wait for it to get crushed under 379.38. And then if it has a big drop, then you can play puts on the initial retest the first time, right? But again, not the best thing to be doing because we're at the lower end oversold of the channel, right? So in terms of puts, your true best entry for puts and hope for puts is it starts to bottom out and it rockets and it goes to 383.76 for a gap close reversal. Your best entry from puts for here for the micro is at 383.76. The previous closing price is at support towards the lower end of the channel. It's make or break. If it cracks and reacts as a resistance level, then we will see a sell-off to 376.66. If it cracks and reacts as a resistance level, then we drop to 374.13. Best level for calls is at 374.13. Another key level of interest for calls would be 376.66, all with tight stops. If they can't work at these best levels, then it's no trade, right? And then in terms of the puts, the main focus on puts would be 383.76. Now, if we crash under 379, have a nice drop, you can consider puts at the lower level. Just be extremely careful, right? So if you see a massive drop under 379.38, reacts as a resistance, wait for it to pop back up to the previous support. If that reacts as a resistance with a confirmed roof, you can try puts at that level. So just to quickly recap things, the best level possible for calls heading into tomorrow and next week would be 374.13. The second best level would be 376.66. In terms of put options, the best level possible currently is at 383.76. And right now we are at a make or break support level of this 379.38. So it's make or break. If it reacts as support, they're going to try to fill the gap. If it reacts as a resistance, they're going to try to fill the gap at 376.66. If it reacts as support, they're going to try to fill the gap at 383.76. In terms of when is this gap going to fill at 383.76, it's going to fill if the SPY can maintain above this previous closing price. And in terms of, well, when is it going to happen? It's truly going to happen when the SPY breaks above 381.87, has a break above it, pulls back, forms support at previous resistance right here or higher support. That's when it's going to start to fill the gap. That is my analysis for the SPY. I hope you enjoyed this and learned a lot. If you do want to be a part of Traders Society, that's going to be the first link down below in the description. I will see you guys tomorrow live at Market Open.